Hello friends, welcome to my YouTube channel Kavita Sutas Grow with Us. Unit 2 Basic Cost Concepts Part 2. According to the association with product costs are those costs which are easily attributable to products. These costs are also called inventoriable cost because these are included the cost of product as work in progress, finished goods, or cost of sales. These costs are necessary for the production and will not be incurred if there is no production. Then fifth one is according to their controllability. Controllable costs are those costs which can be controlled by a specified person or a level of management. For example, cost of raw materials can be controlled by purchasing them in bulk quantities. And uncontrollable costs are those costs which cannot be controlled or influenced by a specified person of an enterprises. For example, costs like factory rent, managerial salaries, etc. These are the example of uncontrollable cost. The next one according to their relevance to decision making. In that first one is differential cost. Differential cost is the result of change in the total cost from an alternative course of action. If the change increases the cost, it is called incremental cost, and the change decreases the cost, it is called detrimental cost. Then sunk cost. Sunk cost results from past expenditure. Sunk cost cannot be changed now, and the management has no control over such cost. For example, past cost of inventory, past costs of long-term assets, etc. Then imputed cost. These costs are also called hypothetical cost or notional costs. These costs are included in cost accounts only for the purpose of taking managerial decisions. For example, interest on capital, rent of own building, etc. should be taken into account while evaluating the relative profitability of the projects. Then opportunity cost. Opportunity cost refers to the benefit foregone as a result of accepting one course of action. For example, if an own building is proposed to be utilized for housing a new project planned, the likely revenue which the building could fetch if it is let out is the opportunity cost which should be taken into account while evaluating the profitability of the project. And then concepts of cost unit and cost centers. Cost unit. Cost unit is a unit of product, service, or time in relation to which costs may be ascertained or expressed. Cost unit is unit of measurement of cost. For example, cement. Cement is the product and the cost unit for cement is the per bag. Like that, power is the product or kilowatt is the cost unit for power, etc. Then cost centers. Cost center is location, person, or an item of equipment for which costs may be ascertained and used for the purpose of control. For example, a location of factory, person, salesman, equipment, machine, etc. Elements of cost. Uh, in that first one is materials. The term materials refers to those commodities which are used as raw materials, components, or consumable for manufacturing a product. In that, there are two types: the direct materials and indirect materials. First one is direct materials. All materials which become an integral part of the finished product and which can be conveniently assigned to specific physical units is termed as direct materials. For example, all materials or components specifically purchased, produced, or from stores. For example, sugar cane for sugar, cloth for ready-made garments, cotton for cloth, tires for car, etc. Primary packing materials, for example, wrapping, and then cardboard, boxes, etc. Indirect materials. All materials which are used for purposes ancillary to the business and which cannot conveniently be assigned to specific physical units is termed as indirect materials. For example, consumable stores, lubricating oil, grease, printing and stationery, etc. Then second one is labor. The workers employed for converting material into finished product or doing various odd jobs in the business are known as labor. In this, there are two types: direct labor and indirect labor. First one is direct labor. The workers who are directly involved in the production of goods are known as direct labor. For example, the wages paid to a machine operator engaged in the manufacture of goods. The wages paid to such workers are known as manufacturing wages. And second one is indirect labor. The workers employed for carrying out tasks incidental to production of goods or those engaged for office work and selling and distribution activities are known as indirect labor. For example, wages of storekeepers, foreman, directors' fees, salaries of salesmen, etc. Then third element of cost is expenses. All expenses other than material and labor are termed as expenses. In that, first one is direct expenses. Expenses which can be identified with and allocated to cost centers or units are called direct expenses. For example, carriage inwards, production royalty, higher charges of special equipment, cost of special drawings, designs and layouts, experimental cost, etc. Then indirect expenses. These are expenses which cannot be directly or wholly allocated to cost centers or cost unit. All expenses other than indirect material and labor which cannot be directly attributed to a particular product, job or service are called indirect expenses. For example, rent and rates, drawings, designs and layouts, experiment, lighting and heating, advertising, insurance, repairs, carriage, etc. are the examples of indirect expenses. Thank you for watching. Kindly like, share and subscribe to my channel Kavita Sutars Grow With Us.